Welcome to the Southwest Florida Real Estate Update, hosted by the York Group of Downing Fry Realty. Our show will bring you the most up-to-date information on the local real estate market, presented by leading experts in the field.
Hi, and welcome to the Southwest Florida Real Estate Update. I'm Michael York of the York Real Estate Group, and today we're joined by our host Jim York and his guest Robert Slaughter, Mortgage Sales Manager at USbank.
Thank you, Michael, for the introduction. Well, Mr. Slaughter, thank you for coming on the show.
Glad to be back.
You know, I'm always excited when you come on the show because when we're dealing with customers, most of the time we're dealing with mortgages too. So I wanted you to come on the show and give us a little update on your business and where we are.
Yeah, and I think about cash is king in Collier County. I think it's about 60% of the market, but
yeah.
mortgages are still hanging in there
Still
at 40%,
hanging in there.
40% of the market. So just to introduce myself, I'm Robert Slaughter. I'm the sales manager over for USbank. Our office in Naples is in the Mercado, and we also have an office up in Cape Coral on Del Prado Boulevard. Hopefully, they're telling us by the beginning of next year we should have two full brick and mortar retail branches open, and so that will be exciting to see the bank grow into the market.
Yeah, and people that don't know about USbank, they are the 5th largest bank in the country, right?
Correct.
So they're mostly, where are they mostly stationed?
It kind of, the footprint for the bank right now runs from about Ohio west all the way to California. So they've opened some branches in North Carolina, and then Naples is going to be the next out of footprint branches they're opening. So that tells you how bullish they are in the Naples market and wanting to get the branches opened here first in the state of Florida.
I know we're lacking banks and branches. So, you know, the Fed's just lowered the rate, okay? So how does this affect buyers or sellers? You know, where are the rates do you think are headed?
Yeah, you know, so it's interesting, and I'm going to put a timestamp on this or date stamp. This is August 7th, 2019. But today, the headlines in the mortgage, news was that it's the lowest rates we've had since November of 2016, and so rates have bumped back down. I think that, I just looked up a 30-year fixed-rate mortgage with, buying with a 20% down payment, 740 credit score, and rate today was 3.625. So that tells you we're well below a 4% rate. And that's really changed over the last, 6 months. I think we were in the high 4s. If you'd asked me about 6 months ago where we were, and we've already, we've dropped down to the mid 3% on a 30-year fixed. The thought right now is that, by the end of the year, they think that we're going to see rates possibly into the low 3% mark. They think that the Treasury market, which kind of walks lock and step with mortgage rates, is gonna get down that low. But I will tell you, been doing this 20 plus years.
That's right, you have.
Economists will say one thing, and then all of a sudden rates will go in the
other direction.
Right. It's just based on current events, current market, what's going on. So, we will see on that. But right now, as I say, we're at our lowest rates since end of 2016.
Yeah, and that's good for buyers, and that can save them a lot on monthly mortgage payment. So,
correct.
So, pre-qualification letter, when we're selling with somebody, a buyer, working with a buyer, or even with we're representing a seller, you get a pre-qualification letter or you can get a pre-approval letter. So just tell our viewers a little bit of the difference, because I don't think a lot of people understand it.
Yeah, it's kind of frustrating because as an industry, we don't have one set term on what is a pre-qualification, what is a pre-approval. And lenders all do it differently. There are some lenders that will issue out a pre-qualification letter with somebody filling in information and filling in what their debts are and not even pulling a credit report, and they'll issue out a pre-qualification. On my end, what I like to do is, I like to talk to a borrower, I like to review an application, pull credit, and then I also like to review the income and asset information just to make sure what they're stating on the application matches with the way we as a lender would, calculate their income and look at their assets. And so I try to do that before I do my pre-qualifications. Actually, I get as as granular as, I'm trying to find if they have a property they're looking at. I'll get the tax record to see what the tax bill will be, if there's going to be an HOA fee, and even, is there going to be insurance? Is it in a flood zone? So I try and really get as much detail so I'm as accurate as possible on, my pre-qualification that I'm doing for a borrower.
So that's the pre-approval letter is what?
The pre-approval and pre-qualification are really the same thing.
It depends on the bank.
Right. The other thing we can do at USbank is we can send a file in if you've got somebody actively looking but they've not found a property and they want to save some time on closing once they find a property. What we can do is we can take an application without a property, go ahead and complete it, send it to underwriting to underwrite the income and asset and credit piece, and we can get an approval just subject to appraisal and clear title on the property.
So when can they lock in the interest rate?
So as soon as a property is selected and we have a contract with the property address, I can go ahead and lock in the interest rate. Our typical lock term is for 45 days. We can go as far out as 360 days into the future on a locked interest rate, but the longer you lock out, generally the interest rate is getting higher because a lender is having to hedge, they're giving you an interest rate lock. What happens if, rates go up in 3 months or 4 months if you're on a 6-month lock. But general lock term for most people is somewhere between 45 and 90 days is we'll do the lock-ins, but we do have the extended locks.
And we're going to bring up on the screen here an application because it's important that either you fill out an application before or after you do the contract so you can pre-qualify them, right?
Yeah, that's kind of whether I'm pre-qualifying or whether they're going to application. There's a doc list that I'll send out. I'll kind of check it because each borrower is a little different on what we need depending on loan type, other things. So I'll kind of fine-tune that list, but that's generally what a lender is going to look for when they're either pre-qualifying or taking a new loan application.
Yeah, and what we put on the screen here is what they need for that application.
Correct.
So they can bring all that so it's not going back and forth.
Correct.
Robert, we're going to take a little short break. We're going to hear a little bit about the York Real Estate Group, and we'll be back in 1 minute. We have 4 or 5 more questions to answer by Robert here. Thank you.
Thinking of buying or selling a home in Naples, Marco Island, Bonita, or Estero, Florida? Think of the most experienced York Real Estate Group, associated with the #1 brokerage in Southwest Florida, Downing Fry Realty, which produces yearly real estate transactions of over $1 billion. Jim, Michael, and Morgan make up the York Real Estate Group of Downing Fry Realty, with over $275 million in sales transactions, along with offering over 25 combined years' experience in the local market. The Yorks can offer the experience and trust you need in a realtor. Call them today at 239-273-6727 or visit their website at www.naplesyorkrealestate.com.
Welcome back. Robert, let's talk about closing costs because, that's another question we're always getting. What is our closing costs? So give us just a rough idea how you calculate it and what maybe you leave out in your closing costs because you can't, every property is different.
Yeah, so there's two kinds of closing costs. One is a fixed cost, the cost of an appraisal, our application and processing fee, a credit report fee. Those are all fixed, and then some are variable, and they're based on typically loan size or purchase price. I just put some ballpark numbers together. On a $250,000 loan, closing costs would be around 2.1% on a purchase. On a $500,000 loan, the closing costs are about 1.5%, and then on a $750,000 loan, closing costs are about 1.3%. So those are some ballparks. When you come to refinance, there is some savings if you're in a single family home, you would have had a survey done with your purchase.
Right.
So we don't need a new survey. On your title insurance, we do have to update the policy, but you get about a 30% savings on that reissue policy by having already gotten the policy once on the property. And then there's no owner's title insurance, it's just a lender's title policy. So there is some savings on a refinance, but it's still, in Florida, somewhat expensive to refinance.
And what's a portfolio loan?
So when USbank services all the loans that we do, so they're all serviced, we close them, we service them, within the USbank. Some of the loans, the actual loan itself will be sold onto the secondary market. If you've heard of Fannie Mae and Freddie Mac, that's one area where you can sell loans to. FHA and VA, those are government loans that we sell on. But a portfolio loan is a loan that we keep, that we're not selling the loan. So not only are we servicing it, but we actually own the loan. The biggest example is jumbo mortgages. So mortgages above 484 are going to be jumbo mortgages, and we're going to keep those internally and use our own money, our own balance sheet to fund the loans. And so that's really a portfolio loan. Jumbo loans, there's no secondary market right now, so the bank will keep those. Sometimes with a borrower, we may like the borrower, but they don't fit into a more traditional mortgage,
right,
and we may do that as well.
How about what's a good time to refinance or get a mortgage?
Great question. I'm getting a lot of this lately. So I guess what I would say is the biggest thing I do is there's a couple factors on a refinance. One is, are you going to stay in the home, for a period of time? And two is, are you going to keep the mortgage on the home for a period of time? Because those are big factors on whether you should refinance or not. I just did, once again, I penciled in some numbers, but if you have a $400,000 loan with a 5% rate and the new rate is, let's say, 4%, just to keep the math simple, you're going to save about $2,000 a year just in interest. And if the closing costs are $6,000, within 3 years you're going to be able to break even on redoing that mortgage. So that's the calculator I use. At the high side, you want to be able to recoup your savings within 5 years, but it's all based on loan size. So a $100,000 loan, you're going to need a much higher spread between current and what your interest rate was. On larger loans, you don't need that much of a spread, but I usually ballpark on a decent sized loan is you want to be at 1% or near 1% in order to make sense for the refinance.
Okay. How about condos? Because there's a difference between single family loans and condo loans.
Yeah.
So just touch base on that a little bit.
Yeah, so I think what most people don't fully understand is when they purchase a condominium, we're already going through and qualifying a borrower. So we're going through and analyzing their credit, their income, their assets. We're also evaluating the property through an appraisal to help us to determine what the resale value, if we had to take the loan back, is approximately. So those are two things we do. And with a condominium, we actually have to generally dive down and get in a little more detail on the condominium association itself. We look at
rentals, right,
percentage of rentals to owners. Is there litigation going on against the condominium? If so, what is it? How many unit owners are past due in their payments?
Reserves?
How much the condominium association is putting away in reserve. So it's like an extra level where we're analyzing the condo as well to make sure our loan is safe in addition to the borrower being qualified. So it's possible for a qualified borrower to purchase a property, a condominium, that we can't qualify.
Right.
It's nothing against the borrower, it's just the unit itself. There's some questions that we had during the process.
And my last question I have is, what is PMI for people who don't understand that? And
Sure.
what is the rate, for that?
Right. So generally, PMI is private mortgage insurance. When you're putting less than 20% down, on a property. One of the ways that a lender can mitigate the risk of that is that they'll go out and get a mortgage insurance policy. There's about 6 or 7 national companies that provide this. And so what happens with that is we'll break down a monthly fee into our payments. So it'll be principal, interest, tax, insurance, and the PMI payment. And we'll have that in place. It's not a benefit to the borrower, it's a benefit to the bank, but it does allow a bank to lend, greater than,
90% loan
right,
versus
correct.
80, right?
There are different options. Sometimes we'll do a first and second mortgage. Sometimes we'll prepay the mortgage insurance policy or just handle it on a portfolio loan. And then but the most common way is a mortgage insurance payment.
Well, Robert, I appreciate you coming on the show today. I know my son, my daughter, and I, maybe for the last 3 or 4 years that they've been with me, but I've been dealing with you for the last 20 years.
Yeah.
And you've done a ton of mortgages for us. You've done our whole family, and I highly recommend this guy here. So appreciate you tuning in today, and we'll talk to you next week. Thank you.